Welcome to the deep dive. We've got quite a stack of information right here, all about the tech giant Broadcom, ticker symbol AVGO.
That's right. And yeah, it's not just one article. We're looking at a detailed report, their earnings review, some analyst takes, other bits of data.
Okay.
So our job here is to, cut through the noise, pull out the really important stuff quickly, and give you a solid handle on this company.
All right, let's dive in. Broadcom. This report mentions it was trading around, what, $246.93?
Yeah, somewhere around there.
And it notes a 5% dip in one day, right around their earnings.
Exactly. And this info is pretty fresh, data up to early June 2025, and it uses their Q2 results, the quarter ending May 4th. So, yeah, current numbers.
Good. So what's the core business here, according to this source?
Well, fundamentally, Broadcom designs and sells complex semiconductor devices, the chips powering loads of modern tech. But they also have a big infrastructure software arm now. Those are their two main segments, semiconductor solutions and infrastructure software.
So chips and software. Sounds simple, but what kind of chips and software are we really talking about here? What's their focus?
Okay, so on the chip side, the report mentions a whole range, but the really key stuff right now seems to be for data centers and connectivity. Think Ethernet switching silicon, basically the high-speed network plumbing, and crucially, custom AI accelerators. They call them XPUs internally, specialized chips for AI stuff. They still do other things, broadband chips, Wi-Fi, but the spotlight in this document, definitely data center and AI.
Okay, so the future-facing chips and the software side.
Yeah, the software, as the source lays out, is pretty much defined by that huge VMware acquisition they did.
Right.
So it's focused on infrastructure software, mostly for big companies, enterprises.
Got it. Chips for the digital backbone, especially AI, and software running the big corporate IT systems. Okay, let's look at performance. Q2 fiscal 25 results are highlighted here. What were the big numbers?
Well, for that quarter ending May 4th, the report says total revenue hit a record $15 billion.
Wow, $15 billion.
Yeah, and that was up 20% year over year organically. Adjusted EBITDA, that profit measure was $10 billion. That's like 67% of revenue, which is really strong.
Very strong.
And importantly, that EBITDA number beat their own guidance. Free cash flow was also solid, $6.4 billion, about 43% of revenue.
Record revenue, really high margins, tons of cash flow. I mean, those sound like exceptionally good numbers for a company this size.
They are, yeah. And the report is pretty clear where the strength is coming from, mostly AI chips and that VMware-driven software segment.
Okay, here's where it gets interesting, digging into those segments.
Yeah.
How did the semiconductor business actually do, especially with all the AI hype?
Right, so the semiconductor segment brought in $8.4 billion in Q2. That's up 17% year over year.
17%.
But what's really significant, as this source points out, is that growth rate accelerated from Q1, where it was more like 11%. And within that segment, AI semiconductors were just the absolute star, surged 46% year over year, over $4.4 billion just from AI chips in the quarter.
46% growth in AI chips alone. That's huge.
It really is. And the document specifically calls out that this is their 9th quarter in a row of strong growth in AI.
9th quarter. Wow.
And the key drivers within AI, according to this report, were AI networking chips and those custom AI accelerators, the XPUs.
Okay.
The AI networking stuff, especially their high-end Ethernet switches and routers like Tomahawk and Jericho, that was exceptionally strong, grew over 170% year over year.
Whoa, 170% just for the networking part of AI.
Yeah, and it made up like 40% of their total AI revenue in Q2.
So they're not just selling the brains, the compute chips, but also the critical plumbing connecting everything in these giant AI data centers.
Exactly. That's a good way to put it. High-speed plumbing for the AI revolution. As these hyperscalers, the big cloud guys, build out more AI compute, they need incredibly fast networks.
Makes sense.
And Broadcom's Ethernet gear is clearly winning big there. The custom AI accelerators, the XPUs, also grew strong double digits year over year. But yeah, networking was the real rocket this quarter.
But the document also mentioned that not everything in the chip business is booming, right?
That's right. And it's important for balance. The non-AI chip business was actually down 5% year over year in Q2. Brought in $4 billion.
Okay.
Management commentary in here suggests they think it's kind of close to the bottom. They saw some sequential improvement in broadband and enterprise networking, but other areas like industrial and wireless, still down year over year.
So a bit of a mixed bag there. Booming AI, but the traditional stuff is dragging. How does the software side fit in?
Software, the VMware part, was also really strong. Revenue hit $6.6 billion, up 25% year over year.
25% solid.
Yeah. And the main reason for that growth, according to the report, is they've been really successful shifting enterprise customers onto Broadcom's full VCF software stack subscription model.
Right, the VMware integration.
Mhm.
What exactly is that VCF transition?
Basically, Broadcom's bundling VMware's main virtualization and cloud software into one big subscription package. VCF is VMware Cloud Foundation.
Gotcha.
And this document says they've done really well getting their top customers onto it. Like over 87% of their top 10,000 customers have adopted VCF already.
87%, that's fast.
It is.
Yeah.
And they expect this conversion process to keep going for another year, year and a half at least. So that gives them good visibility for growth there. Plus, the software segment has this really high operating margin, around 76%.
76% margin, wow.
Yeah, the source points to that as showing, their discipline, integration, and pricing power.
Definitely noteworthy.
Mm-hmm.
Okay, so that's Q2. What about the outlook? What does the source say about what's coming next?
Looking ahead, yeah, Broadcom gave pretty optimistic guidance for Q3. They're projecting consolidated revenue around $15.8 billion. That'd be up 21% year over year.
Still strong growth then.
Yep. And for semiconductor specifically, they're forecasting 25% year over year growth in Q3. And the AI chip revenue expected to accelerate again to $5.1 billion. That's up a massive 60% from Q3 last year.
60% growth next quarter.
Yeah.
On top of the 46% they just did, that's incredible expansion.
It really is. And the management comments cited here, they sound pretty confident this AI chip growth can keep going. They think the strong rate they're seeing this year will continue into fiscal 26.
What's driving that confidence?
They're attributing it to growing demand for inference workloads from the hyperscalers, not just the initial training phase.
Okay, inference versus training. Can you quickly break that down? Why is inference demand such a big deal?
Sure. So training is, building the AI model with tons of data. It's compute heavy, but happens periodically. Inference is actually using that trained model in real time. Think facial recognition, language translation, product recommendation.
Like the actual application.
Exactly. You train a model maybe once or occasionally update it, but inference happens constantly, potentially for millions of users. So strong, sustained demand for inference infrastructure means AI is really being deployed and used widely. That could mean longer-term demand for chips like Broadcom's.
That makes perfect sense. Training builds the engine. Inference is running it all the time.
Mm-hmm.
And did the document mention specific big customer deployments coming?
It did, yeah. They said they're making really good progress with their custom AI accelerator customers, expecting significant deployments in the next few years. There's even a specific detail in the source.
Oh, yeah.
They believe 3 of their existing big customers could potentially deploy 1 million AI accelerated clusters each by 2027.
1 million clusters each.
Yeah. And they expect a big chunk of those to use Broadcom's custom XPUs. Just points to absolutely massive scale buildouts planned by their biggest clients.
Incredible scale. The document also used the term wide economic moat to describe Broadcom. What does that actually mean for them, according to this source?
Right, a wide economic moat.
Right.
It's basically shorthand for a company having sustainable competitive advantages that protect its profits long term.
Okay.
And here, the source says Broadcom's moat comes from 2 main things: strong intangible assets and really high switching costs.
Intangible assets.
Yeah.
Like what? Patents.
Yeah, patents, but also just their deep technical know-how, their IP in designing these incredibly complex high-performance chips, especially those custom AI ones and the advanced networking silicon. It's just really hard for competitors to replicate that quickly or cheaply. Creates a barrier.
Makes sense. And the switching costs, how does that work?
Well, that's a big factor across their main businesses. For those huge hyperscalers using Broadcom's custom AI chips, switching suppliers isn't easy. It means massive engineering effort, maybe redesigning software. It's super disruptive and expensive.
Right.
Same in AI networking. Once you've built your data center around their complex Ethernet gear, switching isn't really feasible without huge investment. And then on the software side, VMware is just deeply embedded in so many companies' IT. Moving away from that, it's a massive, costly, time-consuming project.
Yeah.
And that shift to subscriptions we talked about, that just makes it even stickier, locks customers in longer.
So basically, once you're using Broadcom, whether it's chips or software, it's really hard and costly to leave.
Got it. I also saw something about a collaboration with Corning on co-packaged optics. Sounds pretty cutting edge.
It does, yeah. There's a press release mentioned from May 13th, 2025, about them working with Corning on co-packaged optics infrastructure, specifically for AI data centers.
Okay.
It shows they're looking ahead to the next generation of high-speed connections.
Mm.
They seem to think that as AI clusters get even bigger, these advanced optical interconnects will become necessary maybe in the next year or two. So they're positioning for that next infrastructure wave.
Interesting. Always looking ahead. Now, obviously, the growth story sounds fantastic, especially AI and VMware.
Hmm.
But the document also flags some potential issues or risks, right? Absolutely. Yeah, it's not all sunshine and roses. The source definitely points out several things to keep an eye on, potential headwinds.
Okay, let's cover those potential speed bumps. What's the first one the source brings up?
Well, valuation, for one. The report notes the stock price using that $251.42 figure from the earnings section.
Yeah.
It says that's trading significantly above our estimated fair value of around $219.70 from this particular source's point of view anyway.
Okay, so even with all the amazing growth we just talked about, this source is basically saying, hey, maybe the stock price already reflects a lot of that good news.
That's definitely the implication from their valuation take, yeah. It suggests the market might have priced in a lot of the optimism already. Also, the source expects a slight dip in gross margin sequentially in Q3.
Oh, okay. Why?
It's not necessarily a huge red flag, but they note it's mostly because they'll be selling a higher mix of those custom AI accelerators. And those chips historically just have slightly lower gross margins than some of their other products.
Gotcha. What else?
Another really big one mentioned is the debt. They ended Q2 with $69.4 billion in gross principal debt, mostly from buying VMware.
69 billion. Yeah, that's substantial.
It is. And while their free cash flow is great, like we said, the percentage of revenue it represents is kind of held back by the higher interest payments on all that debt, plus higher cash taxes.
Right.
The source makes it clear that paying down debt is Broadcom's top priority for free cash flow right after paying dividends.
Okay, debt reduction is key. And you mentioned earlier the reliance on just a few big hyperscale customers for that AI growth. Does the source flag that as a risk too?
It does, absolutely. A big chunk of this AI growth story is tied to just a handful of huge customers spending big on AI infrastructure.
Right.
That creates customer concentration risk. Their revenue becomes really sensitive to the spending plans, the timelines, maybe even the internal chip efforts of just those few key players. Any change there could have a big impact.
And that non-AI semiconductor decline we talked about,
Yeah.
is that seen as a continuing issue?
Yeah, the source points out that while AI is flying high, that declining core non-AI chip business is still a drag on the overall segment growth rate, could continue to be a factor. And then there's just the broader world. The document mentions uncertainty from, global trade policies, export controls. The future impact is kind of unknown.
Right, the macro stuff.
Yeah.
Looking at the analyst price targets in the document
Yeah.
from the last 6 months or so,
Yeah.
seems like they kind of reflect this mix of excitement and caution. Quite a range.
They really do. Yeah, the document shows a range of targets, with the average noted around $250, pretty close to that recent trading price mentioned. And the news headlines included really highlight the different views. You see really bullish ones like poised to surge to new highs or Broadcom's silent AI takeover begins.
Right, leaning into the AI story.
Exactly. But then you also see more cautious takes like watered down AI play, AI bonanza has limits, and limited upside ahead. It just shows the complexity, right? Evaluating a company with such strong growth, but also clear risks and these valuation questions.
Well,
Oh, and the document also mentions they authorized a new $10 billion share buyback program back in April, running through December 25.
okay. Another way to return value.
Yeah, though it sounds like debt paydown is the main focus for cash right now.
So putting this all together, what does it mean for you, the listener who shared this document?
By really digging into these specifics from this one source, the segment performance, the moat, the AI outlook, the software transition, but also the debt, the valuation debate, customer concentration. You get a much clearer, more nuanced picture, right? Exactly. It gets you way beyond just a headline or a stock chart. You see how Broadcom's positioned right in the middle of these huge tech trends, AI, enterprise software, but you also see the specific challenges and risks they're navigating. It's all laid out right here in the material you brought us. And, digging into all this from the document you provided, it leaves me with an interesting thought. Given how much Broadcom and its biggest customers are investing right now in the current generation of AI infrastructure and networking, how is that going to compare scale-wise and maybe even fundamentally, to this transition to optical interconnects that the company sees coming in just the next year or two.
Mhm.
How might that shift reshape the whole landscape again and Broadcom's role in it? It just highlights how fast things are moving, even within this boom.
That is a fascinating question to think about as this tech keeps racing forward. We really enjoy doing these deep dives, helping you cut through the clutter and get informed fast.
Yeah, absolutely. So if you found these insights useful and you want more deep dives like this one, definitely make sure you subscribe to this channel.
Please hit that bell icon too. It really helps support what we do here, and it makes sure you don't miss the next deep dive into whatever fascinating source material comes our way. Thanks so much for joining us.